Good afternoon. This is Ken at Tortoise Capital with a review of the weekend trading report for November 16th, 2019. So we have a market that's in bullish quiet conditions. It's overbought on every look-back period at the highest possible level. All systems go in the market mosaic. Green bullish on percent stretch above the 200. The ADX14 is almost at the threshold for strong upward trend. Relative volatility is quiet. The risk index is in risk-on conditions with a z-score of 0.84. This is actually pretty favorable because it's pulled back, and the volatility that has caused us to pull back has been to the upside. So it's kind of in the fall of risk Z, but still favorable for swing trading. Because it's the fall, we do ensure that we've locked in our gains as we go, so this is no time to be complacent, but it's a time to be exposed to the long side. You can see the long-term stats on risk Z and the VIX and so forth, and the current reading at 12 is pretty quiet. Bottom-up rebalancing holdings for the different portfolios, and then the current leaders based on closing prices on Friday. ETF2 exposure is at 100%. Getting great feedback from the folks that are using the TC2000 package. I should say that's at kl-bundle.com. I'll add that to the links here shortly. Monthly market health check. All systems go, all-time highs. Next target is about 315 to the upside. I'd use a monthly low to lock in those excess gains and don't let that escape. The breakdown point would be below the belly of the dragon, and then the next target would be around 275, 280-ish at the Bollinger Band mean, and then the PSAR flip at about 260. But everything's positive. We're in the summer, and still going. Weekly to zero in just a little more carefully again. 315 is available. The upside, maybe a 2-week low. The fair value and the RL 90 and the Bollinger Band mean all kind of lining up here so that 298-ish is sort of the maximum amount of room that you should give this for any kind of swing. PSAR flip at 290, and then the PSAR base at like 280 are the downside moves. Again, summer, fall, summer on the weekly, so that's favorable. Daily, just a remarkable set of gains on Friday, as there's just nothing there for the shampeachment, and no resistance to the upside, so keep rewarding. The one-day low, Monday's opening, the Bollinger or the Dragon Belly at about 308, the PSAR flip at 306, fair value at 306 and a half, along with the Bollinger Band mean stop, and the 90 down here at 302, 303. Z-1, 296, and the 200 period moving average being left in the dust. But notice that RL 90 so positive. That's the health of the trend on the next higher time frame, which we saw in the weekly. A really good run in the summer. This little bit of a stall here earlier in the week is what got us into the fall, but Friday feels decisive. ETF portfolios for BMR, all systems go. You see the winners continuing to win. Technology, finance, U.S. and Japan. Technology leading the way. Healthcare and Pfizer, Merck, just no-brainers. Off we go. Dow 30, the big winners this week. Nike, United Health, Disney. There's more room in Disney. Winners continuing to win up here, GE and Apple. In the sector spiders, it was healthcare, and healthcare equipment. See a pattern? ETF Max, the big winners from this week, still continued to do pretty well, stabilizing. No big losses. U.S. all above average, except for a little bit of trivia. Everything green and good to go in the broad indexes. Technology, healthcare leading the way. Green and yellow, green and white. So that's South Korea and Japan. Dividend continue to do pretty well. Semis and Taiwan doing well. Technology. So that's really the place to be. Technology and healthcare. Shifting to the daily. Seeing no signals in here. Cisco really got smashed this week, so there's some opportunities. Even energy starting to work, though, making the turn. Pfizer at a really painless 1-hour gain intraday. Strongest stock in the strongest sector. That'll be part of the webinar technique that we look at later this evening for subscribers. Dow Tactical Summary, lots of dojis, and even though it's going into the weekend, big breakouts to the upside. Nike, Microsoft, but look at United Health, wow, and Johnson & Johnson. Why not? ETF 30, a handful of dojis, no other signals. The big breakouts down here, the Dow, technology, finance, the S&P had a great big breakout. Healthcare, too easy. It's time to be cautious and humble. Pay attention to your stops. United Health with the big stretch along with Disney and healthcare. Microsoft has been just getting it done. McDonald's slowly recovering. Still some value plays opportunities there. The same 5 super pinch candidates are rewarding. Many auto framer opportunities better than 2-to-1. Gold, Brazil, ExxonMobil win, and Cisco's big sell-off allows some gains. Travelers and Cisco, 7 and 10 ATRs below their long-term fair value, and along with McDonald's and IBM, still lots of value baked into the cake. Will reward your careful attention. Daily squeezes, lots of those with favorable numbers based on Friday's relative lack of range. The summer leaders right now, the spring and summer leaders right now, I like that McDonald's has made the turn along with Nike. But, Disney, U.S. Steel, Microsoft. Lots of big breakouts over the multiple look-back periods. Look at United Health. The real laggards, Cisco. Metals and mining, oil exploration. There's room for those to recover. Notice that oil exploration had a pretty good 3-day bump after a sell-off on 10 days. Long and strong, but at a level at which it's hard. I mean, how do you get much better than that? That's what this is saying. Would be a natural time to see some recovery. The last time it did that, sell off. So this little excursion is one that you got to enjoy and lock in those gains. So that's what I want to cover this weekend. More details on the swing trade portfolio management and then the tactical technique review tonight on the webinar for subscribers, and we'll get that posted in Patreon for those of you playing along there. So this is Kenneth Tortoise Capital. Keep your risk measured and your powder dry.